Question 6. What are the specific risks associated with investing in the cybersecurity industry as a whole? The cybersecurity industry offers promising growth potential, but it also comes with inherent risks that investors should be aware of before allocating capital to this sector. Here's a breakdown of some key risks associated with investing in cybersecurity companies or ETFs like CIBR. Rapid evolution of threats. The cybersecurity landscape is constantly evolving. New cyber threats and vulnerabilities emerge regularly, requiring companies to adapt and innovate their security solutions. Cybersecurity companies that fail to keep pace with these advancements might struggle to compete and see their market share or profitability decline. Regulation and compliance. Governments around the world are increasingly implementing regulations to address cybersecurity concerns. These regulations can mandate specific security protocols for companies, potentially increasing compliance costs for cybersecurity firms. Additionally, changing regulations might create uncertainty and disrupt business models. Consolidation. The cybersecurity industry is experiencing consolidation, with larger firms acquiring smaller players. This trend can limit investment opportunities and reduce competition, potentially leading to slower innovation or price increases for security solutions. Valuation risks. Cybersecurity companies are often growth-oriented, and their stock prices might reflect high valuations based on future potential. If these companies fail to meet ambitious growth expectations, their stock prices could experience significant corrections. Cybersecurity breaches. Ironically, cybersecurity companies themselves are not immune to cyber attacks. A successful attack on a cybersecurity firm could damage its reputation, erode customer trust, and lead to financial losses. Dependence on skilled workforce. Cybersecurity solutions rely heavily on skilled professionals to develop, implement, and manage them. A shortage of cybersecurity talent could limit the industry's growth potential and increase costs for companies. Geopolitical risks. Geopolitical tensions can influence the cybersecurity landscape. For example, cyber attacks might be used as tools for espionage or warfare, impacting the demand for cybersecurity solutions in specific regions. Question 7. What is the sector allocation of CIBR's holdings? The sector allocation of CIBR's holdings primarily focuses on the technology sector, with some diversification into other industries. Here's a breakdown of the typical sector allocation for CIBR. Technology services. This is the dominant sector within CIBR, typically accounting for around 80% to 85% of its holdings. This includes companies that provide various cybersecurity services, such as cloud security, endpoint security, identity and access management, IAM, and security consulting. Electronic technology. This sector might represent around 10% to 15% of CIBR's holdings. It includes companies that develop and manufacture hardware components used in cybersecurity solutions, such as firewalls, intrusion detection systems, and encryption equipment. Other sectors, a minimal portion, typically less than 5% of CIBR's holdings, might fall into other sectors like commercial services, e.g., security training companies, or cash and derivatives. Understanding sector allocation's importance. Knowing the sector allocation of CIBR's holdings helps you understand the ETF's overall risk profile and potential performance drivers. Here's why it matters. Technology reliance. The heavy concentration in technology services exposes CIBR to the risks and rewards associated with that sector. Strong technology sector performance can benefit CIBR, but a downturn could negatively impact its returns. Limited diversification. While CIBR offers some diversification within technology through exposure to different subsectors, It doesn't provide the same level of diversification as a broad market ETF. Question 8. Does the underlying index of CIBR ETF focus on large cap, mid cap, or small cap cybersecurity companies? The underlying index for the CIBR ETF, the Nasdaq Cybersecurity Index, focuses primarily on large cap cybersecurity companies. Here's a breakdown of the selection criteria for companies within the index. Market capitalization. To be included in the Nasdaq Cybersecurity Index, a company must have a minimum worldwide market capitalization of $500 million. This threshold automatically excludes small-cap companies from the index. Industry classification. Companies must be classified as cybersecurity companies by the Consumer Technology Association, CTA, to be considered for the index. Liquidity. The index also considers a minimum 3-month average daily dollar trading volume of $1 million and a minimum free float of 20%. These liquidity requirements further favor companies with established market presence and trading activity. Implications for CIBR. Large cap focus. Since the underlying index prioritizes large cap companies, CIBR primarily offers exposure to established players in the cybersecurity industry. This can provide some stability and potentially lower volatility compared to an ETF focused on smaller, high-growth companies. Limited exposure to mid-cap and small-cap. Investors looking for exposure to the high-growth potential of smaller cybersecurity companies might not find CIBR to be the ideal choice. Alternative investment options. If you're interested in broader exposure to the cybersecurity industry, including mid-cap and small-cap companies, you might need to explore other options. Thematic ETFs. Some thematic ETFs might focus on a broader cybersecurity theme and include companies of various market capitalizations. Actively managed funds. Actively managed funds can invest in a wider range of company sizes based on the portfolio manager's investment strategy. However, these funds typically come with higher expense ratios compared to passively managed ETFs like CIBR. Understanding the focus on large cap. Large cap companies in the cybersecurity industry are often well established with proven track records, name recognition, and a more stable financial foundation. This can be appealing for investors seeking a balance between growth potential and relative stability. Question 9. Does the underlying index of CIBR ETF have a value or growth tilt, or is it more balanced? The underlying index of the CIBR ETF, the Nasdaq Cybersecurity Index, doesn't explicitly target value or growth stocks. However, due to the index construction methodology and the current state of the cybersecurity industry, the holdings within CIBR tend to exhibit a growth tilt. Here's a breakdown of why. Market capitalization focus. The index prioritizes large cap companies. Large cap companies in the cybersecurity industry are typically still in a growth phase, aiming to expand market share and revenue. Their stock prices tend to reflect this growth potential, often trading at valuations higher than their current earnings would justify. Growth stock characteristics. Industry characteristics. The cybersecurity industry is a relatively young and rapidly growing sector. Companies within this space are often focused on innovation, research and development, and customer acquisition, all of which contribute to a growth-oriented investment approach. Limited value representation. While the index doesn't explicitly exclude value stocks, the focus on large cap and growth characteristics within the cybersecurity industry makes it less likely for traditional value stocks, companies trading at a discount to their intrinsic value, to be included. Is CIBR a pure growth play? While CIBR exhibits a growth tilt, it doesn't guarantee all its holdings will outperform in every market environment. Some companies within the ETF might have more established business models and trade with lower valuations compared to pure high-growth companies. Alternatives for value investors. Investors seeking a more explicit value tilt within the cybersecurity space might need to consider alternative options. Actively managed funds. Actively managed funds with a value investing strategy could target undervalued cybersecurity companies. However, these funds typically come with higher fees. Thematic ETFs. Some thematic ETFs might focus on a broader cybersecurity theme and include companies with a mix of value and growth characteristics. However, careful research is needed to identify such ETFs. Understanding the growth tilt. The growth tilt of CIBR aligns with the current state of the cybersecurity industry, where many companies are still in a high-growth phase. However, this also means the ETF might be more susceptible to market downturns that typically affect growth stocks more significantly. Question 10. Are there any actively managed cybersecurity ETFs that outperform CIBR historically? Actively managed cybersecurity ETFs aim to outperform passively managed options like CIBR by employing human portfolio managers who make investment decisions based on their research and analysis. However, achieving consistent outperformance is challenging, and past performance doesn't guarantee future results. Here's a breakdown to consider. Potential outperformance. Some actively managed cybersecurity ETFs might outperform CIBR historically, especially during periods when the manager's stock selection and weighting decisions prove successful. These ETFs might have the flexibility to invest in a broader range of companies, including mid-cap and small-cap cybersecurity firms with higher growth potential, but also greater risk. Adjust their portfolio holdings more dynamically based on market conditions and the manager's investment thesis. Challenges of outperformance. Actively managed funds often come with higher expense ratios compared to passively managed ETFs like CIBR. These fees can eat into returns, making it more difficult to outperform the benchmark, CIBR in this case. The success of actively managed funds relies heavily on the skill and experience of the portfolio manager. Their investment decisions can significantly impact the ETF's performance. Finding outperforming ETFs. It's challenging to definitively identify actively managed ETFs that will consistently outperform CIBR. However, here are some resources that might help you in your research. Financial websites. Some financial websites compare the performance of various ETFs, including actively managed options in the cybersecurity sector. You can look for historical returns and compare them to CIBR's performance. ETF research reports. Investment research firms might publish reports analyzing actively managed cybersecurity ETFs and their historical performance compared to benchmarks. Important considerations. Past performance is not a guarantee of future results. Actively managed ETFs that outperformed CIBR historically might not continue to do so in the future. Consider the expense ratio of an actively managed ETF. A higher expense ratio can make it difficult to outperform a passively managed option like CIBR even if the actively managed fund generates slightly higher returns. Actively managed funds can be more volatile than passively managed ones due to the manager's investment decisions. Alternatives to consider. If you're interested in a broader cybersecurity exposure beyond large-cap companies, you might explore thematic ETFs targeting the cybersecurity sector with holdings across various market capitalizations. Consider actively managed funds with a focus on technology or growth stocks, which might have some overlap with cybersecurity companies.